In the annals of technological advancement, certain innovations emerge, forever altering human endeavor. The printing press, the internet, and now, Bitcoin, each a testament to our boundless capacity for innovation. Bitcoin, born from the 2008 financial crisis, is a paradigm shift, a bold challenge to centralized systems. This is the promise of Bitcoin, a decentralized digital currency. Join us as we explore Bitcoin's revolutionary potential. To understand Bitcoin, we must first look at the 2008 financial crisis. Reckless lending and speculation led to a global economic collapse. Trust in centralized institutions plummeted. Bitcoin emerged as a decentralized alternative. It promised control over financial destinies. A global currency free from central banks. Bitcoin offers a more equitable financial system. At the heart of Bitcoin's allure lies its decentralized nature, a stark departure from the centralized systems that have long dominated the financial landscape. Unlike traditional currencies issued and controlled by central banks, Bitcoin operates on a distributed network of computers known as nodes, scattered across the globe. This decentralized architecture ensures that no single entity, whether a government, corporation, or individual, can exert undue influence over the Bitcoin network. This inherent decentralization is the bedrock of Bitcoin's resilience and resistance to censorship. Traditional financial systems, with their centralized points of control, are vulnerable to manipulation, censorship, and even collapse. Bitcoin, on the other hand, remains impervious to such threats, as its distributed nature renders it virtually impossible to shut down or control. Transactions on the Bitcoin network occur directly between peers, bypassing the need for intermediaries such as banks, thereby reducing fees and increasing efficiency. Furthermore, the transparency of the Bitcoin blockchain, which records every transaction ever made, fosters accountability and reduces the potential for fraud and corruption. Unlike traditional financial systems shrouded in opacity, the Bitcoin blockchain provides a public and immutable ledger that can be audited by anyone, ensuring the integrity and traceability of every transaction. This decentralized and transparent nature of Bitcoin has profound implications for individuals and businesses alike. It empowers individuals by granting them greater control over their finances, protecting them from censorship and arbitrary seizures. For businesses, Bitcoin offers a secure, efficient, and cost-effective way to transact globally, opening up new markets and opportunities. As we stand at the cusp of a new era in finance, Bitcoin has emerged as a beacon of hope for those seeking a more equitable, transparent, and accessible financial system. Its decentralized nature, coupled with its inherent scarcity and resistance to censorship, has captivated the imaginations of individuals, investors, and entrepreneurs worldwide. However, the path to mainstream adoption is not without its challenges. Bitcoin's volatility, regulatory uncertainty, and the potential for misuse have fueled skepticism and apprehension among some. Yet, as with any disruptive technology, these challenges also present opportunities for innovation and refinement. The ongoing development of Layer 2 solutions, such as the Lightning Network, promises to enhance Bitcoin's scalability and user experience, while increased regulatory clarity will foster greater institutional adoption. The journey ahead may be fraught with uncertainty, but the transformative potential of Bitcoin is undeniable. As we delve deeper into its intricacies, we will explore both the promises and the perils of this revolutionary technology. We will examine its potential to reshape not only the world of finance but also other industries, from supply chain management to digital identity. Join us as we navigate the evolving landscape of Bitcoin, separating hype from reality and empowering you with the knowledge to make informed decisions about the future of your finances. The Bitcoin revolution is underway, and whether you choose to participate or observe from the sidelines, its impact will be profound. In the realm of technological innovation, few creations have sparked as much intrigue and debate as Bitcoin. Born from the 2008 financial crisis, Bitcoin challenged traditional currencies and centralized financial systems. In October 2008, Satoshi Nakamoto published a white paper proposing a decentralized digital currency. This groundbreaking document outlined Bitcoin's revolutionary blockchain technology. Bitcoin represented a paradigm shift, promising financial freedom and control. The allure of a global currency resonated deeply with those seeking a more equitable financial system. To grasp Bitcoin, we must understand its technology, the blockchain, a decentralized ledger distributed across computers recording every transaction. Nodes maintain copies, ensuring security and resilience. Transactions are verified and added by miners who are rewarded. The blockchain's immutability ensures tamper-proof records. The process of mining is often likened to a digital gold rush, where miners compete to unearth valuable bitcoins from the depths of the digital realm. However, unlike traditional gold mining, which relies on physical labor and heavy machinery, Bitcoin mining is a computational endeavor, requiring significant processing power and energy consumption. Miners leverage specialized hardware, known as ASICs, or application-specific integrated circuits, designed specifically for Bitcoin mining. These powerful machines perform trillions of calculations per second, attempting to solve the complex mathematical problems that secure the Bitcoin network. The difficulty of these problems is adjusted periodically to ensure that blocks are mined at a relatively consistent rate, regardless of the total hashing power dedicated to mining. As the Bitcoin network grows in size and value, the competition among miners intensifies, driving up the demand for more powerful and efficient mining hardware. This has led to concerns about the environmental impact of Bitcoin mining, as the energy consumption associated with mining operations continues to rise. However, proponents of Bitcoin argue that mining incentivizes the development of renewable energy sources, and that the network's energy consumption is a small price to pay for the benefits it provides. The rewards for successful mining can be substantial, with miners earning newly created Bitcoins and transaction fees. However, the costs associated with mining, including hardware, electricity, and cooling, can be significant, making it a capital-intensive endeavor. As a result, many miners have joined forces, forming mining pools to combine their computing power and increase their chances of earning rewards. Section 4. Wallets, your gateway to the Bitcoin network. In the realm of Bitcoin, wallets are your trusted companions, safeguarding your digital assets and granting you access to the vast expanse of the Bitcoin network. Unlike physical wallets that hold tangible currency, Bitcoin wallets store the cryptographic keys that give you control over your Bitcoins. These keys, consisting of a public key and a private key, are essential for sending and receiving Bitcoins. Your public key, akin to your bank account number, can be shared with others to receive Bitcoins. It's like your digital address on the Bitcoin network. Your private key, on the other hand, is the key to your digital vault, granting you the authority to spend your Bitcoins. Safeguarding your private key is paramount, as losing it would render your Bitcoins irretrievable. Bitcoin wallets come in various forms, each catering to different needs and levels of security. Software wallets, stored on your computer or smartphone, offer convenience and accessibility. Hardware wallets, resembling USB drives, provide enhanced security by storing your private keys offline. Paper wallets, as the name suggests, involve printing your private keys on a piece of paper, offering a low-tech but effective way to store Bitcoins offline. Choosing the right Bitcoin wallet depends on your individual requirements and risk tolerance. If you're new to Bitcoin and transacting small amounts, a software wallet might suffice. For larger holdings or enhanced security, a hardware wallet is recommended. Remember, regardless of the type of wallet you choose, safeguarding your private keys is crucial for protecting your digital wealth. Section 5. The Genesis Block. A look back at Bitcoin's origins. On January 3, 2009, a pivotal moment in the history of finance unfolded as the first block of the Bitcoin blockchain, known as the Genesis Block, was mined. This inaugural block, mined by Satoshi Nakamoto himself, marked the birth of Bitcoin and the dawn of a new era in digital currency. The Genesis Block, containing a single transaction sending 10,000 Bitcoins to an unknown address, holds more than just monetary value. Embedded within the block's code is a cryptic message, a testament to the times in which Bitcoin was born. The message, the Times 03 Jan 2009 Chancellor on brink of second bailout for banks, references a headline from the British newspaper The Times, highlighting the economic turmoil that served as the backdrop for Bitcoin's creation. The Genesis block serves as a poignant reminder of the motivations behind Bitcoin's creation, a desire to create a decentralized and resilient financial system, free from the control of governments and central banks. It's a testament to the power of cryptography and decentralized networks to challenge the status quo and offer alternative solutions to long-standing problems. As we reflect on the significance of the Genesis block, we are reminded that Bitcoin is more than just a digital currency. It's a symbol of innovation, a beacon of hope for those seeking financial freedom and autonomy. The journey from the Genesis block to Bitcoin's current prominence has been marked by both triumphs and challenges, but its underlying principles remain as relevant as ever. Section 1. A new era of financial sovereignty. For centuries, centralized institutions controlled our wealth, but history shows their vulnerabilities. Bitcoin offers a new era of financial sovereignty, empowering individuals. Imagine controlling your wealth without government or bank interference. Bitcoin transcends borders, offering true financial independence. Erosion of fiat currencies. Unlike traditional currencies, whose supply can be manipulated at the behest of central banks, Bitcoin operates on a predetermined issuance schedule encoded into its underlying protocol. Only 21 million Bitcoins will ever exist, ensuring its scarcity and protecting it from the inflationary pressures that plague fiat currencies. This inherent scarcity is a key driver of Bitcoin's value proposition, as demand continues to grow while supply remains finite. In a world awash in unprecedented levels of government debt and quantitative easing, Bitcoin stands as a beacon of stability, a digital asset whose value is determined by market forces, not the whims of central planners. As individuals and institutions increasingly seek refuge from the inflationary pressures of fiat currencies, Bitcoin's appeal as a store of value is only likely to grow stronger. While Bitcoin's price may fluctuate in the short term, its long-term trajectory is one of increasing value, driven by its scarcity, growing adoption, and the ongoing erosion of trust in traditional financial systems. Bitcoin offers a way to preserve your purchasing power, protecting your wealth from the ravages of inflation and ensuring its longevity for generations to come. Billions of people worldwide lack access to traditional banking services, excluded from the global financial system due to poverty, lack of identification, or geographical remoteness. Bitcoin, with its decentralized and permissionless nature, transcends these barriers, offering a pathway to financial inclusion for the unbanked and underbanked populations of the world. Imagine a world where anyone with a smartphone and an internet connection can access financial services, send and receive money, and participate in the global economy. This is the transformative potential of Bitcoin, a digital currency that requires no bank account, no credit check, and no permission from any central authority. Bitcoin empowers individuals regardless of their socioeconomic status or geographical location to take control of their finances and access the opportunities afforded by the digital economy. Remittances, a lifeline for millions of families in developing countries, are often burdened by exorbitant fees and delays imposed by traditional money transfer operators. Bitcoin offers a faster, cheaper, and more efficient alternative, allowing individuals to send money across borders instantly, with minimal fees, directly to the recipient's digital wallet. This peer-to-peer nature of Bitcoin transactions eliminates the need for intermediaries, reducing costs and empowering both the sender and the receiver. Bitcoin's potential to empower the unbanked extends beyond remittances. It provides a platform for micro-lending, Transparency and trust are elusive in traditional finance. Bitcoin's blockchain offers a transparent, immutable ledger. Every transaction is traceable and auditable. Blockchain's transparency extends beyond finance. It revolutionizes supply chains and voting systems. Blockchain's potential is just beginning. Unleashing the power of decentralized finance. Bitcoin, the Internet of Money, has sparked a wave of innovation. Blockchain technology has given rise to decentralized finance, or DeFi. Imagine accessing financial services without banks or brokers. DeFi applications enable peer-to-peer financial interactions. Decentralized exchanges allow direct cryptocurrency trading. Lending platforms offer interest on cryptocurrency holdings. Stablecoins hedge against volatility while using blockchain. DeFi is still developing, but promises to disrupt traditional finance. DeFi aims to democratize financial services and empower individuals. From centralized institutions and towards individuals. Bitcoin's decentralized nature, operating independently of any central authority, undermines the ability of central banks to control the money supply and manipulate interest rates. As Bitcoin adoption grows, central banks may find their ability to manage inflation, stimulate economic growth, and respond to financial crises increasingly constrained. Furthermore, Bitcoin's ability to facilitate cross-border transactions without the need for intermediaries or permission from central banks threatens to disrupt traditional remittance markets and reduce the reliance on SWIFT, the global interbank financial telecommunication network. This could have significant implications for countries with restrictive capital controls, or those seeking to reduce their dependence on the US dollar as the global reserve currency. While it is unlikely that Bitcoin will completely replace fiat currencies or render central banks obsolete in the near future, its emergence as a viable alternative to traditional financial systems poses a significant challenge to the status quo. As Bitcoin adoption continues to grow, central banks will need to adapt to a changing financial landscape, potentially leading to greater innovation and competition within the financial sector. Section 7. Bitcoin and the Future of Nation-States. The emergence of Bitcoin, a decentralized and borderless digital currency, has profound implications for the future of nation-states and the relationship between citizens and their governments. As Bitcoin adoption grows, governments will grapple with the challenges and opportunities presented by this new paradigm of money and finance, potentially leading to a redefinition of the role of the state in the 21st century. Bitcoin's ability to facilitate cross-border transactions with minimal fees and without the need for permission from governments could undermine capital controls and reduce the effectiveness of economic sanctions. Governments may find it increasingly difficult to control the flow of capital across their borders, potentially impacting their ability to enforce regulations, collect taxes, and exert influence on the global stage. On the other hand, Bitcoin's transparency and immutability could enhance government accountability and reduce corruption. Blockchain technology, the foundation of Bitcoin, could be used to create more transparent and efficient systems for tracking government spending, collecting taxes, and maintaining land registries, reducing opportunities for fraud and mismanagement. Furthermore, Bitcoin's potential to empower individuals and foster financial inclusion could lead to greater economic growth and stability, particularly in developing countries. As more people gain access to financial services and participate in the global economy, it could lead to a reduction in poverty, increased innovation, and a more prosperous and equitable world. Section 8. A Global Movement: The Rise of the Decentralized Economy. Bitcoin is more than just a digital currency. It's a catalyst for a fundamental shift in the way we think about money, finance, and the role of centralized institutions in our lives. The emergence of Bitcoin has ignited a global movement towards decentralization, empowering individuals, fostering innovation, and challenging the status quo across a wide range of industries. The decentralized nature of Bitcoin, operating on a network of computers distributed across the globe, serves as a model for a more resilient, transparent, and equitable society. As we move towards a future where information, value, and power are increasingly decentralized, Bitcoin's principles of individual sovereignty, transparency, and open access will continue to guide this transformation. The rise of the decentralized economy, powered by blockchain technology and fueled by the principles of Bitcoin, has the potential to reshape industries, empower individuals, and create a more just and equitable world. From decentralized finance to supply chain management, from digital identity to online voting, the applications of blockchain technology are vast and far-reaching. As we stand at the cusp of this technological revolution, it is essential to understand the transformative potential of Bitcoin and the decentralized economy. The future belongs to those who embrace these technologies and the principles they represent, empowering themselves and contributing to the creation of a more open, transparent, and equitable world. Section 1. The Ascent of Digital Gold. Since its inception, Bitcoin has captivated investors worldwide, its meteoric rise in value a testament to its growing appeal as a viable alternative asset class. From niche technology to global phenomenon, Bitcoin's price trajectory has been a roller coaster ride of highs and dips. Yet, Bitcoin has shown remarkable resilience, driven by fundamental factors that transcend market fluctuations. Its ascent from a fraction of a cent to tens of thousands of dollars per coin is remarkable. This rise is fueled by increasing awareness, adoption, and institutional interest. Bitcoin's unique characteristics set it apart from traditional asset classes. Its decentralized nature makes it immune to political and central bank actions. This independence and limited supply have led many to call Bitcoin digital gold. While volatile, Bitcoin offers opportunities for substantial rewards. Successful investing requires understanding fundamentals, managing risk, and a long-term perspective. Conduct thorough research, diversify your portfolio, and invest wisely. Section 2. A hedge against uncertainty. In an era of geopolitical instability and economic uncertainty, investors seek alternative assets to hedge against systemic risk. Bitcoin, with its decentralized nature and limited supply, offers a compelling option for portfolio diversification. The global financial system, based on fiat currencies, is fragile and susceptible to economic shocks and political manipulation. Bitcoin, independent of any central authority, provides a potential safe haven for preserving wealth. Its decentralized nature makes it resistant to censorship and inflationary pressures. As governments grapple with debt and inflation, Bitcoin's appeal as a hedge against uncertainty is likely to grow. Section 3. Scarcity in a world of abundance. Despite technological advancements, scarcity remains a fundamental economic principle. Bitcoin, with its fixed supply of 21 million coins, embodies digital scarcity. Fiat currencies can be printed at will, devaluing existing currency and eroding purchasing power. Bitcoin's finite supply, governed by a predetermined issuance schedule, is immune to such manipulation. As demand for Bitcoin grows, its limited supply exerts upward pressure on its price. Bitcoin's digital scarcity has profound implications for the future of money and finance. Section 4. Embraced by Titans' institutional adoption of Bitcoin. Bitcoin, once on the financial fringes, is now recognized by institutional investors as a viable asset class. Major corporations like Tesla and MicroStrategy have added Bitcoin to their balance sheets. Hedge funds and asset managers are allocating capital to Bitcoin for its potential returns and portfolio diversification. This institutional influx brings sophistication, liquidity, and regulatory scrutiny to the Bitcoin market. Institutions view Bitcoin as a hedge against inflation and a store of value. As more institutions enter the space, Bitcoin's legitimacy as an asset class is likely to grow. Section 5. Beyond speculation, real-world applications and utility. Bitcoin's potential extends beyond speculation, with real-world applications rapidly expanding. Bitcoin facilitates cross-border payments, offering a compelling alternative to traditional remittance services. Its decentralized nature empowers the unbanked, providing access to financial services. Bitcoin's underlying technology, the blockchain, has far-reaching implications for various industries. From supply chain management to digital identity, blockchain promises to revolutionize data tracking and verification. As Bitcoin adoption grows, its impact on the global economy and society is only beginning to be felt. Bitcoin, often hailed as the Internet of Money, is a gateway to a new paradigm of economic activity. The emergence of Bitcoin has sparked a wave of innovation in decentralized applications and platforms. Decentralized finance, DeFi, enables peer-to-peer financial interactions, cutting out intermediaries. DeFi provides unprecedented control over financial assets and access to a wide range of services. Bitcoin's underlying technology powers innovation in supply chain management, digital identity, and content distribution. By investing in Bitcoin, you support the development of this emerging ecosystem and benefit from its transformative changes. In investing, the allure of quick profits often overshadows the power of compounding. Bitcoin, with its limited supply and potential for significant price appreciation, offers a compelling long-term investment opportunity. Unlike traditional savings accounts, Bitcoin has the potential to generate substantial returns. Early investors have been rewarded for their patience and conviction. The key to harnessing Bitcoin's potential is adopting a long-term investment horizon. By holding Bitcoin and reinvesting profits, investors can accelerate the compounding effect and build generational wealth. The world of Bitcoin investing can seem daunting, but with guidance, it can be rewarding. Educate yourself about Bitcoin's fundamentals, technology, and risks. Choose a reputable exchange to buy, sell, and trade Bitcoin. Store your Bitcoin securely in a wallet that meets your needs. Hardware wallets offer the highest security, while software wallets offer convenience. Take appropriate security precautions to protect your Bitcoin from theft or loss. Bitcoin's potential for astronomical returns comes with inherent volatility. Its price is prone to sudden and dramatic swings, driven by supply and demand. News events, regulatory pronouncements, and technological advancements can cause price fluctuations. Volatility is the price of admission to this evolving asset class. Approach Bitcoin investing with a long-term perspective and risk management. Dollar-cost averaging and holding Bitcoin for the long term can mitigate volatility. Embrace volatility as a potential source of opportunity rather than a cause for fear. As Bitcoin continues its ascent from the fringes of the financial world to the mainstream consciousness, it finds itself navigating a complex and ever-shifting regulatory landscape. Governments and regulatory bodies around the world are grappling with how to classify and regulate this novel asset class, their pronouncements and policy decisions capable of sending shockwaves through the Bitcoin market. The very nature of Bitcoin, a decentralized currency operating outside the traditional purview of central banks and financial institutions, challenges long-held notions of monetary sovereignty and financial control, leading to a patchwork of regulations that vary widely from country to country. This regulatory uncertainty, while a source of frustration for some Bitcoin investors, is an inevitable consequence of its disruptive potential. Governments are understandably wary of any technology that threatens to upend the existing financial order, and they are treading cautiously, weighing the potential benefits of Bitcoin against its perceived risks. Some countries have embraced Bitcoin, enacting favorable regulations that foster innovation and attract investment, while others have taken a more restrictive approach, imposing strict controls or even outright bans on cryptocurrency trading. The implications of this regulatory uncertainty are far-reaching, impacting everything from the price of Bitcoin to the development of new products and services built on its underlying technology. Regulatory clarity, or the lack thereof, can make or break businesses operating in the Bitcoin space. influencing investment decisions and shaping the future trajectory of this nascent industry. For Bitcoin investors, staying abreast of regulatory developments is crucial, as policy changes can have a significant impact on the value of their holdings. Navigating this regulatory maze requires vigilance, adaptability, and a willingness to engage with policymakers to advocate for sensible and innovation-friendly regulations. The Bitcoin community, renowned for its technical prowess and passionate advocacy, has a critical role to play in educating regulators, addressing concerns, and shaping the future of Bitcoin regulation. By fostering dialogue, promoting transparency, and demonstrating the transformative potential of Bitcoin, the Bitcoin community can help create a regulatory environment that fosters innovation, protects consumers, and allows this groundbreaking technology to flourish. In the realm of Bitcoin, security is paramount. Your Bitcoins are secured by cryptographic keys and digital protocols. As a Bitcoin investor, you are the sole guardian of your digital wealth. Implement robust security measures to protect your assets. Hardware wallets offer the gold standard in security. Use strong passwords, two-factor authentication, and reputable exchanges. Education and vigilance are your greatest allies. Stay informed and protect your digital kingdom. Section 4. Whales and Manipulators. Navigating Market Manipulation. The Bitcoin market is like an ocean, home to small fish and massive whales. Whales can create waves that ripple across the entire ecosystem. Bitcoin's decentralized nature resists traditional manipulation but isn't immune to whales. Whales holding vast amounts can influence the market, especially in low liquidity. A whale selling a large portion can trigger a market crash. This causes traders to panic and sell, driving prices down further. Conversely, a whale buying can create artificial buying pressure. Awareness of these risks helps mitigate their impact. Understanding supply and demand dynamics is crucial. Monitor trading volumes and avoid emotional decisions. Bitcoin's transparency provides tools to identify manipulation. Blockchain analysis firms track whale movements. Regulatory oversight will increase transparency and accountability. This will help deter manipulation and create a level playing field. Section 1. Bitcoin, a calculated leap into the future. Bitcoin is more than a digital currency. It symbolizes innovation, challenges the financial order, and offers hope for financial sovereignty. From its origins with Satoshi Nakamoto to its blockchain technology, Bitcoin promises to revolutionize industries and empower individuals. Understanding Bitcoin's fundamentals helps in making informed investment decisions. Section 2. The ongoing evolution of finance. The Bitcoin revolution is about restructuring our relationship with money and finance. It challenges centralized financial systems and explores new paradigms of value exchange. Bitcoin empowers individuals, fosters transparency, and breaks down economic barriers. Its decentralized nature challenges traditional financial institutions. Bitcoin offers greater control, faster transactions, and reduced censorship. The shift towards a decentralized financial system is underway. DeFi applications provide financial services without traditional intermediaries. Stablecoins offer a way to hedge against volatility. Innovative applications will continue to emerge, blending physical and digital worlds. Bitcoin is poised to disrupt industries and redefine money in the 21st century. Section 3. Embracing the decentralized future. The Bitcoin revolution is a movement towards individual empowerment, financial inclusion, and equitable wealth distribution. Embracing decentralization and transparency, we can create a future where technology serves humanity. The decentralized future is a collaborative effort involving developers, entrepreneurs, and everyday individuals. By educating ourselves and supporting innovative applications, we shape the future of Bitcoin. Bitcoin has sparked a global movement towards a more decentralized and equitable future. The journey has just begun, and the possibilities are limitless. As we venture into this uncharted territory, let us proceed with caution and optimism. The future of finance is being written in the lines of code that power Bitcoin.